So we will cover two things. The first thing is calculation using file. So do you have this file? The file I sent you before? I think the name of company is a Breton, I guess. Do you have that file, or you want me to send you again? So I send you the file again, so make sure you open this file. So we'll practice this file first, and then we discuss about final exams, right? So can we start now? Say something. Okay, so let's start. So I'm going to open this file, and then you can calculate it. So here is your file. Okay. So this is the company. So let me give you a quick glance over the information in this file. So this is your income statement, as you can see, all right? So this is for 2003 and 2002, right? We have sales, cost of goods sold, gross profit, operating cost. All these are selling, general expense, lease, depreciation, and total. We got operating profit. So sometimes we call it net profit before, right? Then we have a tax, 94, 64. Then preference stocks, 1010, and 221 and 138 is a net income or net profit after interest, tax, and preference dividend. We do not have any information about common share dividend, but we have information about EPS, earning per share, and dividend per share. So this EPS is already calculated. So make sure when you will calculate your EPS, it must be equals to this EPS. So you can compare your answer with this answer. Right? So this is the income statement. Now here is your balance sheet. You have current assets, cash, marketable securities, accounts payable, and inventory. So this is your total current assets, 1223 and 1004 for 2002. Now we have a gross fixed assets. Gross means we haven't minus the depreciation, but of course we have to indicate the assets by subtracting the depreciation value. So these are the cost values, And then we have a depreciations, which is 2295 and 56. Then we got net fixed assets. And net fixed assets, which means fixed assets plus current asset, is your total asset, which is 3597 and 3270. And this information is about liabilities and equities. So start with the current liabilities. We have accounts payable, notes payable, and accruals. All these are current liabilities. So total current liabilities, 2003, 620, and 2002, 483. This is your total debts. Long-term debts, which is 1023 and 967. So total debts or total liabilities is 1643 and 1450. This is your stocks. So we have a preference stocks and common stocks. So this is your preference stocks and this is your common stocks. So remember, use this price as a market price. Remember, when you calculate price earning ratio, you need a market price, because the formula for price earning is a market price divided by EPS. So you need a market price. So you use this $2.50 as a market price, right? And 2003, issued and outstanding shares, right? So this is your number of shares for 2003 and number of shares for 2002, because when you calculate EPS, which is net income divided by number of common shares, so you need these two common shares to calculate your earning per share. Then you got some paid up capital, and finally retained earning. So your total equity is 1954 and 1820, and then total liabilities and equity is 3597 and 3270. So this is the information about balance sheet, and this is your income statement. So let's start with calculating your all the ratios. Or of course you're going to calculate it, but I'm writing here. So the first ratio is a profitability ratio. In profitability ratio, the first ratio is a gross profit ratio, right? So we calculate ratio here. So this is 2003. You calculate 2003 number you will show here, and here 2002, and here good or bad, right? So gross profit ratio formula is gross profit divided by sales multiplied by 100. So quickly calculate gross profit ratio and calculate gross profit ratio and tell me your answer. So make sure everybody calculate, because I'm saving the answers and I mean your replies. If anybody who do not calculate it, you will lose your marks. All right. So remember that. So calculate gross profit ratio. Okay. So for 2003 is 33%. All right. And 2002 sorry, 32%. 32%. And 2002 is 33%. So is it good or bad? You have to say good and bad as well. You have to explain to me good or bad. Tell me, is it good or bad? Quickly. So in this situation, it's bad, right? Because your gross profit ratio compared to last year, it's reduced, right? Second one, it's a net profit ratio. Formula is net income, all right, divided by sales. Calculate for both years and tell me how much is this. Is it 7.5% or 14%? Make sure you check again. It's a net income, all right? You check again whether it's 14% for 2003 or 7.5, because some of you are giving me 7.5 and one student gave me 14%. Check again. Two thousand two is 5.8%. So good or bad? Good or bad? Quickly. It's good because this ratio increased. So let's move on to the third profitability ratio, which is return on capital employed. Return on capital employed. The formula is operating profit divided by equity plus total liability, right? So you have to calculate for 2003 and 2002 and good or bad. So calculate return on capital employed and give me the answer. Make sure you check this is 0.25% or 25%, because you have to multiply by 100 as well if you look at your formula. Make sure everybody calculate. How much? Quickly tell me. You're taking so long. Two thousand three, it's 11.7%, and it's 9% or 9.3%. This is increased, so good. All right. Number 4, return on equity. Return on equity. Formula is net income divided by equity. All right. Calculate for 3 and 2 and give me your answer. Everybody calculate, not just only 2 students. So for 2003, it's 8%, and 2000, it's 11%, sorry. 11%, all right, and 8%, which is good. All right, so this is your return on equity. So profitability ratio is finished. Let's move on to the next ratio, which is efficiency. So let's move on to the next ratio. So next ratio is the efficiency ratio. So the first ratio is a assets turnover ratio. Assets turnover ratio. So the formula is sales divided by total assets, right? Multiply by 100. So calculate for 2003 and 2 and tell me how much is this. So it's for 2003, it's 85%, and 2002, it's 79%, right? Which is good because this ratio has been increased. So make sure you know increase or decrease. Next is a inventory turnover period, right? Formula is inventory divided by cost of goods sold multiplied by 365 days. So calculate inventory turnover and tell me how many days is the answer. So make sure your answer will come in a days, not in percentage. All right? So calculate. So it's 2003, it's a 51 days. All right. And 2002, it's 64 days. Good or bad? It's good. Yes. Let's move on to the next, which is accounts receivable collection period, right? Accounts receivable collection period. So the formula is accounts receivable divided by sales and multiply by 365 days. So calculate account receivable collection period and tell me for 2003 and 2. So for 2003, it's 60 days, and 2002, it's 52 days. It's good or bad? Yes, it's bad, all right? Because compared to last year, this year, our account receivable taking 8 days extra, so like 1 week extra. Let's move on to the last efficiency ratio, which is accounts payable payments period. Accounts payable payment period. Formula is accounts payable divided by credit purchase, but unfortunately we do not have any specific information about purchase. So instead of writing purchase, so we can use a cost of goods sold. Calculate and tell me for both years. For 2003, it's 67 days, and 2002, it's 58 days, right? Which is also bad because since this ratio is increased. So this is all about efficiency ratio. So let's move on to the next ratio, which is solvency ratio. So we start with short-term solvency ratio. So short-term solvency ratio is a current ratio. Current ratio. So current assets divided by current liability. So calculate for both years. Current ratio. So for 2003, it's 1.97 is to 1, and 2.07 is to 1. All right, so it's reduced. So I think we should call it bad. So keep it close to 2 if it's going far from 2, because this year has been reduced. But if it keep reducing in the upcoming years, so this is not a good sign for the user. So we assume it's bad, right? Let's move on to second ratio, which is quick ratio. Formula is quick assets divided by current liability. Again, your answer will comes in ratio. So calculate for both years. So 2003 is 1.5 is to 1, and 1.46 is to 1, right? So yes, it's getting further. So I assume it is not really a good signal. So because it's getting far from 1:1, which is the standard quick ratio. So instead of holding too much cash, we should invest it. So if our ratio, if quick ratio is getting higher, this is not a good signal for the company. So this is the quick ratios. So let's move on to the next. Now we move on to the long-term solvency ratio. So the first ratio is a gearing ratio. Gearing ratio. So the formula for gearing ratio is debts divided by equity plus total debts. All right? So we can multiply by 100. So calculate for both years. So it's 28%, and 2002 is nearly 30%. So this is good or bad? Good. Yes, it's good because your debts level has been reduced in your total liability. Total capital. This ratio decrease is good, right? Good, not bad. Right? Next one is equity to total assets. Equity to total assets ratio. Formula is equity divided by equity plus total debts. Calculate. You tell me. It's 2003, it's 54% and 56%. Good or bad? It's bad. Because your equity proportion has been reduced, right? Compared to your debts. Let's move on to the fifth ratio, which is interest coverage ratio. Formula is operating profit divided by interest, and your answer comes in times, right? Calculate and tell me how much. So for 2003, it's 4.5 times and 3.3 times, which is good. So compared to last year, so this year our ability to pay interest has been increased, right? So that's all for solvency ratio. Let's move on to the last ratio, which is shareholders investment ratio. So the first ratio for shareholder investment is the earning per share. Earning per share. Formula is net income divided by number of common share. This is for 2003, 4, 2. 2003. So now calculate for 2 years earning per share. It's already given, but make sure you calculate and you check whether you are correct or not. It's a 0.23 and 0.15, which is good. So compared to last year, this year, oh, no, it's wrong. You made a mistake to calculate this one. It should be 2.9 and 1.8. Now look at here, is given in your question. You made a mistake. Earning per share, which is, net income, which is 221 divided by number of shares. Number of shares here for 2003 and 2002. So make sure you check again. And you should remember one thing. This number is not a $221. It's in, if you look at here, it's in thousands. So thousands. And then you divide it by number of shares, which is 76262. So then 221,000 divided by 76262. Then your answer should be 2.90. All right, so make sure, don't make mistake. You read your question carefully. All the numbers are given in thousands. All right, all the numbers are given in thousands. Same thing with the balance sheet. But when you use balance sheet with income statement, that's fine. You don't have to convert it. But when you use some information like here, it's a 76th, or you can do 2 to 1 divided by 76.262. So you can do that. All right. So you don't have to convert it. So be careful about it. All right. Is it okay with everybody? Did you understand earning per share? Everybody understand earning per share? Say something, yes or no? Okay, so let's move on to the next ratio, which is price earning ratio. Price earning ratio. Formula is market price divided by EPS. You have market price, as I showed you before, and you have EPS. So calculate price earning for 2003 and 2 and tell me how much. So let's move on to the next ratio, which is dividend coverage ratio, or dividend cover ratio. Formula is EPS divided by DPS. You have EPS, you already calculated here. No, that's wrong. It's 2.9 and 1.8. It's 2.9 and 1.8. 2.90 and 1.81, whatever. So this is your EPS, and DPS already given in a question. So calculate your dividend cover ratio and tell me for 2 years. And 2002, it's 2.41. So compared to last year, your dividend coverage has been reduced, maybe because earning has been reduced too. So that's why it's bad. All right. So all these are the ratios. So ratios finished. So any questions regarding these ratios? Or we move on to the final exams, information. Any questions or move on? So let's move on. So let's talk about final exam. So what is the date of your exam? Final exam date? Is it confirmed? What is the date of your final exam? 14th of, okay. All right, so first thing, your final exam topics. So whatever topic we have finished until now, so which means topic 1, 2, topic 8. We finished 8, right? The last topic was a ratio analysis. So you all topics, whatever topic we have covered in this subjects, all will be part of your exam. Second thing is your study material. So remember, you have to focus on your lecture slides and your board work. So whatever information I'm writing on the board, right here, whiteboard. Right? So of course, some online. So all in the class, because in the beginning of since beginning of the semester, we have some classes in the campus, and then later on, all right, I uploaded some videos through Zooms on YouTube, all right? So this is your study material. You don't have to really look at the textbook to prepare for your final exams, but if you want some additional information, you can go with your textbook and focus more on the board work and the YouTube or Zoom information, whatever I'm giving you right now. And if some information that I do not cover from your lecture slides, so don't worry about it, all right? So just focus whatever I have covered. So that will be part of your exams. Next is questions. So you have only multiple choice questions. You know multiple choice questions? Okay, so you have a multiple choice questions. And you have 40 multiple choice questions. Number of questions are 40. And time limits, 60 minutes. 60 minutes, 40 questions. And calculator is compulsory. So no mobile phones. You cannot use mobile phone as a calculator, and you are not allowed to share calculator with the other students, all right? So you have to bring your own calculator, right? And the next is it's a closed book exam, all right? It's a closed book exam. You are not allowed to bring any kinds of material with you, all right? That's it. No written material, no mobile phones, no lecture slides, no notes, nothing else. Right? So this is the information for your final exams. Right? And of course, final exam weightage will be 50%. 50% will be your assignment. All right, so that's all about your financial management. So financial management finished. So do you have any question regarding your assignment? Anybody has any question? Forty questions here. 40 multiple choice questions. So one question is 2.5 marks. 2.5 marks. Right? So your total 100 marks. Final exams 400 marks. Yes, I will post this video on YouTube today, right now, after the class. Any other question? Any questions, or we stop here? Yes, theory and calculation both will be uh, part of your exams, right? Not only theory and calculation both. That's why you need a calculator, right? That's why you need a calculator for calculations questions. So like, for example, I can give you some numbers and I can say that calculate the present value of the stocks. So for example, and I'll give you 3 or 4 options. So you have to pick the right option. You need a calculator to calculate it. Same thing, you can get some questions about NPV or maybe IRR. And I will also provide you table as well if you need it to calculate NPV and IRR stuff. Textbook, you really don't need it. You just focus on this. Focus on this to prepare for your exam. That's enough. You can get full marks. So because whatever information I provided you in the class, whatever examples I provided you in the class, I use those informations to prepare your final exams. No any information out of your slides or out of information. Mainly the information that I cover in the class, only that information, nothing out of that information. So you may not need a textbook to prepare for exam, just the notes that you prepare using my information. That's more than enough. All right, so any other question? Any questions regarding assignment? No, you cannot bring any table, nothing at all. That's what I said. I will provide you all information. Table will be given in your exams, right? In your exam paper. You use that table to do your questions. So you cannot bring any paper, any table at all. Just your stationery, pen, pencil, and stuff. That's it. No paper, no extra paper, no rough paper, no blank paper, nothing at all. All right. Any other question? If no questions, so can we stop? Can we stop here? Say something. Okay. So we stop here. So good luck for your exams and assignments. So make sure you follow all the instruction and guideline for your assignments and the submission deadline, the time to submit and everything. So can we have open exam because the final exam? No, you cannot have open book exams. It's confirmed that it's a closed book exam. Right? If open books, things gonna be so easy for you, right? So it's hardly to, in accounting subjects, finance subjects, you very exceptional case that you have a closed open book exams, but in the mostly situations you have a closed book exam. So I don't think so I can give you open book exams. No, you cannot. Do we have any exercise for us to practice more? Just focus on this file. The file I just sent it you before for ratio analysis. That file is more than enough. And whatever questions I ask you to do in the class, you have a similar questions. No any complicated questions. Whenever question you see in your exams, you're not going to be surprised using that question. So your final exam paper will not surprise you. All right. So whatever information is coming in your final exams, all the questions, the similar questions you have, whatever question you practice in your class, but of course the number and information will be different. But whatever question we practice, like as mixed stream, cash flows, or single cash flows, or NUT, perpetuity, whatever question we practice, exactly similar questions, but with the different numbers. It's easy to calculate, right? So any other question? Any other questions? No questions, so can we stop now? Okay, so please send me email if you have any questions regarding your regarding final exams, or anything is unclear to you. You can send me email, right? I will reply your email soon. So we stop here. Thank you very much, and I'll see you around. Thank you.